Good morning. Is 2026 going to be the year of the great refinance boom? Well, mortgage rates are finally breaking lower after years of volatility, and homeowners, investors, and business owners are all asking the same question. Will 2026 be the year that refinance demand surges again? I think the answer is yes, and I hope you do too. The Medallion funds, we're already seeing early indicators pointing to one of the strongest refinance cycles since 2020 to 2021. From rate cuts to improved liquidity from the Fed, the market is shifting and smart borrowers are preparing now instead of waiting. So let's break down what's driving the momentum and what it means for you. Well, the first being rates are drifting lower after years of pain. After peaking in the 7 to 8% range, mortgage rates have steadily moved down. And here are some of the reasons why. So the Federal Reserve has signaled continued rate cuts and also renewed confidence in the December rate cut. Inflation has cooled over the past year, and debt markets have regained liquidity, as well as prices for a lot of commodities have come down. And investors are also piling back into mortgage backed security, which also brings more liquidity. So by mid 2026, many analysts project rates suddenly in the mid 5 range, with potential dips into the high 4s depending on market volatility and discounts and all that. So for borrowers who locked in anytime between 2022 and 2024, this could be a massive opportunity to refinance. Two, millions of homeowners will finally be in the money to refinance. So between 22 and 24, buyers purchased homes at higher rates and at record prices. And over the past couple of years, you've paid down some equity and made refinancing more attractive. And there's significant payment pressure with higher rates. So there's a lot more room to benefit. And as rates fall, these homeowners will enter the refinance sweet spot. According to National Mortgage Analytics, over 7 million borrowers could become eligible for a meaningful rate reduction refinance by 2026. So investors with DSCR loans, this also means higher cash flow, better DSCR. Not to mention that, but also the ability to pull cash out of properties and turn around and put them into new ones. There's going to be stronger long-term hold metrics too. So it's just an all-around good news. And three, liquidity is returning across virtually all lending channels. And here's what we're seeing. Banks are re-entering the mortgage market. And non-QM lenders are expanding their programs again after scaling back over the past 2 years. DSCR, bank statement, and investor loan rates are all declining. And commercial lending spreads are tightening, which means better pricing. And with more lenders fighting for your business, pricing becomes more competitive, which creates the perfect environment for a refinance boom. Number four, home values are still high, and we can unlock record equity at the moment. Even with minor market corrections, nationwide home values remain near all-time highs. And what this does is it opens doors for cash-out refinances, investment portfolio refinancing, as well renovation loans if you've got a home project you're looking at, equity repositioning. And many investors will use 2026 to 2027 to restructure their balance sheets while values remain elevated. So number five, who should consider refinancing? Well, home buyers who purchased from 2022 to 2024 would be the first class that I think of. They locked in during peak record rates, and reduced payments can happen and improve your cash flow substantially. So real estate investors is another category. When rates come down, DSCR improves, which equals higher appraised values and loan amounts and stronger yields for the investors who purchase them. Also for self-employed borrowers, bank statement loan and asset qualifying loans are going to become cheaper. And when things are cheaper, more people spend. So if you anyone who's planning a cash out strategy, there's talk. We can talk about HELOCs as well as closed end cash outs. In 2026 may be the best window before the next rate cycle turns. So here's the takeaway. Don't wait until 2026. You can start preparing now, and we can actually look at locking in now. And by the time the Fed announces additional cuts, the market's already pricing those in, usually a week or two ahead of time. So the key here is smart borrowers prepare early. Review your current mortgage bill. Let's take a look at some payment savings and see if it's worthwhile. And we can run some DSCR improvement scenarios for investors with multiple properties. And we can also get you pre-qualified so you're ready to lock in quickly when the time is right. It's also helpful to understand the timing of the costs and basically the whole big picture. And that's what I'm here for. If you want to be the first in line when the refi window opens, Medallion Funds is already preparing clients for that shift. And if 2026 becomes the year of the great refinance boom, those who prepare early will benefit the most. That is it for the day. If you visit my website at billraponline.com, there's a market update page that kind of shows you where pricing's at right now. That's a helpful tool for a lot of folks who are trying to think about refinances. But you can also schedule a consultation for us to chat more. That is it for the day, my friends. Have a good one.